Let's start with how the markets performed this week. First, let's take a look at European market. It seems like the silver Silicon Valley Bank contagion has affected markets in Europe. It was not a great week as the markets ended in negative, with Euro Stoxx 600 closing at 451.38, down by minus 1.87. London closed at an all-share index of 7,709.82, down by minus 2.15. The markets in Germany also saw the DAX close at 15,336.42, down by minus 1.9%, while the CAC 40 in Paris ended the week at 7,174.58, closing negative at minus 1.97. And finally, IBEX 35 in Spain closed down by minus 2.14%, with an all-share index of 9,221.3. Now to the markets in Nigeria. At the end of the last weekday of trading on the Nigeria Stock Exchange, a total of 276 million shares in 3,467 deals, corresponding to a market value of 8.5 trillion, were traded. Compared with the previous NGX trading day, Friday's data showed an 11% decline in volume, 178% improvement in turnover, but a 4% decline in deals. The current market capitalization of the Nigeria Stock Exchange is 30.39 trillion naira. And finally, here's a look at what happened on Wall Street as at Friday, March 10. And now for some top stories. The biggest U.S. banking failure since the financial crisis has triggered a sell-off in global markets amid fears about contagion. U.S. regulators last night took control of California's Silicon Valley Bank after a run on the bank forced it to pull itself up for sale. The intervention triggered panic in global markets, with the FTSE 100 closing down 1.67% in London. Billions were wiped off the value of Barclays and HSBC as investors scrambled to figure out how widespread the problems that hit Silicon Valley could be. The tech-focused lender was worth $44 billion at its peak, but was forced into the arms of regulators after suffering losses on its investments, which triggered a crisis of confidence. Now, one of Credit Suisse's longest-standing shareholders has sold its entire stake in the scandal-hit Swiss bank after losing patience with its strategy amidst persistent losses and client exodus. U.S. investment manager Harris Associates, whose deputy chair and chief investment officer David Herrer was for years among the Swiss bank's most prominent supporters, owned as much as 10% of Credit Suisse's stock last year. Harris started to cut its exposure in October 2022, following the bank's $4.3 billion fundraising, when Saudi National Bank supplanted it as the top investor. Digital payment company Flutterwave has refuted recent claims that one of its systems was breached, purportedly causing the loss of 2.9 billion naira. Flutterwave claimed in a statement released on Sunday that the platform had not been hacked and that none of its users had lost any money. The business claimed that following a normal review of its transaction monitoring system, it discovered an odd trend of transactions on selected user profiles. Several accounts have since been suspended in the ongoing investigation. U.S. Federal Reserve Chair Jerome Powell on Tuesday warned the Federal Reserve is prepared to keep raising interest rates in the face of stubbornly high inflation. Powell's testimony before the Senate Banking Committee was the Fed chair's first public remarks since troubling inflation data releases showed the central bank is still struggling to cool the U.S. economy despite its year-long campaign of monetary tightening. Powell told the committee that interest rate levels are likely to be higher than previously anticipated, even though recent economic data was stronger than expected. Now in Africa, negotiations for the construction of a $30 billion LNG terminal between Tanzania, Norway's Equinor and Shell have been completed and contract preparations are underway, Tanzania's energy minister said this week. The development of Tanzania's vast offshore gas resources has been held up for years due to regulatory delays. Last June, all three parties involved signed a framework agreement aimed at bringing closer the start of the project's construction. The government aims to reach a final investment decision for the facility in 2025. China has expressed that it is very puzzled and strongly dissatisfied with the rash decision made by the German government if a report that Germany could ban Huawei and ZTE from parts of its 5G network is true. The Chinese embassy in Berlin said this in a statement released on its website during the week. The embassy was referring to a report by German media saying the government was planning to forbid telecoms operators from using certain components from Chinese companies, Huawei and ZTE, on grounds of national security. According to the SAMP, the South China Morning Post, the embassy asserted that it is puzzled by the decision of the German embassy and called it hasty with no factual basis. Volkswagen is putting on hold a planned battery plant in Eastern Europe and prioritizing a similar facility in North America after estimating it could receive 10 billion euros in US government incentives. The decision is the latest fallout from Joe Biden's $369 billion package of subsidies and tax incentives for green technology that is luring European companies to the US. Europe's largest car maker told EU officials last week that it expected to reap between 9 billion and 10 billion euros in subsidies and loans from the US President's Inflation Reduction Act and other US schemes over the lifetime of the factory. In Nigeria, MTN Nigeria Communication plc has notified the exchange and the investing public of the successful completion of its Series 4 and 5 commercial paper issuance under a 150 billion naira CP issuance program. The telecoms giant, in a statement signed by its company secretary, Mr. Uto Upana, stated that it sought to raise 100 billion naira to enable the company to disburse the fund on short-term working capital and funding requirements. The transaction was 125% subscribed with a total of 125 billion naira raised. Silvergate, the San Diego-based regional lender that transformed itself into a go-to bank for the crypto industry, plans to wind down operations in the face of turmoil in digital currency markets. Citing recent industry and regulatory developments, Silvergate on Wednesday announced that a voluntary liquidation of the bank is the best path forward. The disclosure sent its stock down more than 30% in after-hours trading to $3 per share. Looking ahead in the UK, Chancellor Jeremy Hunt will use next week's budget to set out a new capital allowances regime for businesses to offset a sharp rise in corporation tax and the end of a £25 billion super deduction tax break for investment. Conservative MPs have urged Hunt to be bold and unveil tax cuts to offset headwinds caused by the increase in corporation tax from 19% to 25% in April, even if the fiscal situation is tight. Hunt has consulted on a range of reforms to replace the super deduction scheme for capital investment, a 2-year measure offering 130% tax relief on companies' purchases of equipment. In Nigeria, a federal high court in Lagos Wednesday issued an interim order restricting the CEO of dual-listed oil company Seplat Energy plc, Roger Brown, from everyday running and management of the company. The court order follows allegations that included racism and discrimination against Nigerian workers levied by a group of stakeholders. For its part, Seplat, in a notification to the Nigeria Exchange on Thursday, refuted the allegations presented to the Ministry of Interior, stating that claims brought against the CEO are a malicious response to the implementation of corporate governance standards in the company by the board. Minergie Limited stopped production at its Mastama coal mine in Botswana after a mining contractor halted operations due to unsettled payments. A statement released by the company on Tuesday blamed weakening coal prices for its operational problems. Minergie said coal prices had dropped by at least 33% since mid-December, resulting in the company reducing operations at Masama in order to contain costs. And to South Africa, the plummeting GDP has shocked stakeholders and economists, failing to meet expectations in Q4. Data revealed that GDP fell to levels last seen in the third quarter of 2021 at the height of the pandemic, as major sectors contracted on the back of roiling power outages. Stats SA data released on Tuesday showed that after rallying in the third quarter of 2022, GDP declined 1.3% in the fourth quarter, following an upwardly revised 1.8% rise in the previous quarter. South Africa experienced a contraction revised down to 0.8% in the second quarter and downwardly revised 1.6% growth in the first quarter. Meanwhile, SA President Cyril Ramaphosa on Monday evening did rejig his 28-member cabinet. Of course, general elections are coming up next year in South Africa. The World Bank is pausing future work with Tunisia after statements by the country's presidents on migrants from African countries triggered racist harassment and violence. World Bank President David Malpass told staff in the note sent late Sunday that the bank would be pausing Tunisia's country's partnership framework, which mapped out future programs from 2023 to 2025 and had postponed until further notice a March 21 board meeting to review the new strategic engagement. However, current work was continuing, he said. And finally, in Nigeria, the Central Bank of Nigeria disclosed on Monday that total repayments under the Anchor borrowing program stood at 503 billion naira, representing 52% of total exposure. Addressing journalists in the nation's capital, Abuja, the central bank acting director of corporate comms, Dr. Abdul Mumin Issa, said that the balance of 119 billion naira was not due for repayment. He said the CBN remained committed to the development mandate of stimulating access to finance for the real sector. According to him, the program had supported about 4.5 million smallholder farmers who cultivated over 6.2 million hectares of 21 commodities across the country as of February 2023. Well, that's it for the Market Roundup.